We've got Savoy Equity Partners presenting right now. Barrett has a 20-minute presentation for us. They are offering the opportunity to invest in strategically assembled development sites in downtown Dallas, and he's got a 20-minute presentation.
Well, thanks everybody for joining today. This is my second time here, and I'm glad to be here. So you may have thought you were coming to get pitched on an opportunity zone project, but first, real estate's all about location, location, location. So let's quickly establish why our firm, Savoy, loves Dallas, and then I'm going to dive in specifically to the Power and Light residential project, which is an OZ project my firm's doing in Dallas. So 2024. It was a national 50-year high in apartment supply. And you may have seen in the media that Dallas is often labeled as an oversupplied apartment market. But the media is never good about putting things in context. So DFW is equivalent to the size of the state of Connecticut. Supply in a vacuum, that doesn't really mean much. Think of somebody who had 1 million Beanie Babies in 1997. That would have been really valuable. But if you still have those 1 million Beanie Babies today, you probably, it's worthless, right? So what's really important is to think about demand relative to supply. So let's look at that. In the apartment world, we call that net absorption. So how many of those units that were supplied actually get leased up? So Dallas led the nation. Nearly 37,000 units were absorbed by renters. That was followed by Houston. Yes, there was a lot of supply, but almost all of that in Dallas and Houston leased up very quickly. Exceptional demand fundamentals. You can see over the past several years, Dallas leased almost 120,000 units, new units that came online. And that's an outlier compared to every other market in the country. Jobs drive housing. That's not a big surprise. And Dallas had almost 15% job growth over the past 5 years, second only to Austin in the Sunbelt markets. More importantly, that's diverse job creation. Dallas isn't an oil town or just a tech town. These have been technology jobs, financial services jobs, healthcare jobs. All these have been supporting higher wages and in turn, higher apartment rents. DFW leads in a really important statistic that not many people realize or even track, and that's we're the highest growth of 20 to 34-year-olds. In the past few years, this has grown by almost 125,000 people. That's important to me and potentially to you because these are prime renters. And because of where mortgage rates are, unfortunately, for them and maybe good for us, because of where the rates are, these are renters by necessity. They likely cannot afford to buy a home. Either they don't have the down payment or they can't afford the mortgage. Another big reason so many people are moving to Dallas today is just because of the cost of living. Although Dallas is the most expensive city as far as rent in the state of Texas, it's still 50% cheaper than the average coastal city. So think LA, Boston, New York. It is a steal to live in Texas versus any of those coastal markets. So we talked about all that supply that came online, and if that continued, maybe Dallas wouldn't be able to continue absorbing all the units coming online in the future. But future supply is dropping. We can see that in the permit data, in the number of architect billings, and because of mortgage rates. And so what we can see in the data is that supply will go back to pre-COVID levels within the next 90 days, and then it will just continue to fall over the next few years. And that sets up excellent conditions for developers, for investors over a long-term hold period, which is the project that we intend to do. Now you can look towards the future. So a group called Oxford Economics projects that Dallas will add almost 400,000 jobs over the next 10 years and grow its population by almost 16%, another 850,000 residents. So you combine that with declining supply and you have incredible rent growth potential. Another slide, for the past 6 years, DFW has been the #1 market for apartment investment. So all this combined, Dallas is a great backdrop for the project that we're doing. Our firm has been investing in Dallas for over 10 years. My business partner and I have been in the apartment business since 2005. We've been in the opportunity zone space for the past 5 years. We work both with families that have their own opportunity zone funds, and we raise and manage opportunity zone funds directly. So if you've had a gain and you want to invest into an opportunity zone fund that we manage, that's wonderful. If you've set up your own opportunity zone fund and would like to invest directly into our project, then you can do that as well. Jimmy just kind of talked through that. It sounds like he's going to talk through it more, but we're set up to do both things. We've worked on 3,000 units. Now we're up to about 60 projects. And we're really experts in Dallas. We also like doing weird things. So I'll talk more about public facilities corporations. We've also done historic tax credits, 45L tax credits. It's really all about the after-tax returns. So we're highly focused on that and opportunity zones as well. Our track record, this is likely very small on your screen, but we have bought and sold 30 deals at this point. The multiple on that has been 2.5 times money back to our investors. And we've held the projects for an average of 4.5 years. And the IRR to our investors has been about 40%. So that is certainly not a guarantee of future returns, but we've had a good run over the past decade. So now I'm going to actually get to the main event and talk about the project that we're here to raise money for from accredited investors. We use the 501c structure, so all of our investors get accredited by a third party. So here it is. I'm going to talk a little bit about Power and Light Residential. It's a mixed income multifamily community in the Cedars neighborhood of Dallas, which is just south of downtown Dallas. We actually bought a historic building. It's an 8,000 square foot, 3-story, 100-year-old building and 3.5 acres of land. We're going to use this historic building to be the heartbeat of the community, and we're going to renovate it. And we're doing this all in a public-private partnership with the city of Dallas, and I'll talk more about that. It's obviously in an opportunity zone, so our investors can get tax deferral and tax-free appreciation, and we plan to hold for more than 10 years. On our underwriting, it's a 15% IRR to our limited partners and over a 2.5 times equity multiple, and we're excited about that. We have already invested over $10 million in this project to buy the land, the historic building, to work with architects and civil engineers to get this project closer to being shovel ready. And we bought it from multiple sellers. We have a clean environmental, and we have a very good game plan to start development quickly. Here's a few renderings that we're excited about. We're working with a great architecture firm, actually 2 architecture firms here locally, one for the new building and one for the historic building. And you can see in the bottom left, there's actually the historic building is on that picture, as well as the new building. So you can see how we're kind of blending those two together. And in the historic building, we'll have a co-working lounge, a fitness center, and a tenant gathering space. And that's really how that will be blended into the new building, which will be 315 units of residential living. We're excited because it's not just going to be a cookie cutter, new structure. It's going to integrate this old structure as well. So let me talk about this neighborhood that we're excited about. It's called the Cedars. This is one of the oldest Dallas neighborhoods. It was a historically Jewish neighborhood over 100 years ago. That community moved to North Dallas 70 years ago. This became kind of a light industrial area. Most of those buildings have become functionally obsolete. A lot of artists moved down there. It became a cool, funky area with some lofts and things like that. And now more townhomes and multifamily are going down there, which is really neat. The city is heavily investing a lot of money down here. So there's a convention center where $4 billion of bonds are being put in. There's several $100 million being spent to put in a new deck park, and we're excited about that. And it's also very close to the core of downtown, which is the largest job center in the city of Dallas. And we saw in the Dallas macro sides that job growth and young adult migration translate directly into leasing demand. So there aren't that many Class A properties that have been built here yet. And so we're poised to capture the next wave of these young professionals moving into the area. So here are some of the big projects around our site on this slide. You can see that there's South Lamar Entertainment District, which has restaurants and movie theater, things like that. There's Old City Park, which is this deck park, which will connect the Cedars neighborhood with the farmers market. And then there's also another park planned in the Trinity River Basin. All of these are within kind of a half mile to a mile of our development site. There are also two other Opportunity Zone capitalized projects, which are under construction. We're excited about these because they're not direct competitors to us. So one is a build to rent townhome community, which will be renting at over $3,000 a month. And another is an 8-story luxury tower, which will be targeting rents over 30% higher than ours. Because they're not direct competitors, number one, we don't think that they'll slow down our leasing at all or long-term be competitors with our leasing. And so we believe that they'll just lead to more rooftops, which will ultimately lead to a more vibrant neighborhood. Here's an aerial showing our site map, the 3.5+ acre site and the historic building as it stands today. And you can also see how close we are to downtown and some of the other townhomes and developments going on in the immediate area. Here's the actual site plan. So this is what's called wrap construction. So you'll have a parking garage in the middle, and then you'll have a 5-story building on either side. And the historic power and light building is outlined in blue at the top, which is actually the east side of the site. Here is the historic power and light building. It's 3 stories, 8,000 square feet. The social lounge will be on the bottom floor, co-working in the middle, and the fitness center on the 3rd floor. And this really plays into that kind of 20 to 35-year-old demographic who we believe will pay a premium to have the authenticity and the story behind the structure. And it'll stand out because nobody else has this kind of amenity space. We've already done a structural evaluation of the building. This was the power structure for the streetcars in Dallas 100 years ago, and it was built to withstand a bomb. I mean, the walls are very thick, the floors are very thick concrete, so it's very well suited to handle anything that we want to put in there. A couple investment highlights. So why is this a good deal? Well, we bought the land from multiple different sellers. And because of that, we were able to put it together at a very low basis. So our land basis is $53 a square foot. You can't buy anything in this neighborhood for today below $75 a foot, but a lot of our competitors have paid between $80 and $100 per square foot for land. So we're starting off at a good basis, and that's great. Number two, we've been working on this for 18 months. And the city of Dallas has given us some great grants and reimbursements for things like upgrading sewer lines, upgrading water lines, and just for doing this project overall. So that helps us lower our cost basis in the project. And then number three is something I'm about to talk about, which is this public-private partnership. So the city of Dallas has a program, and this is really a state of Texas program, but facilitated by the city of Dallas, where the municipality wants affordable housing. And we as developers don't like paying property taxes. So we make a deal. We say if 50% of the property is rented to people making about $85,000 a year at a slightly lower rent, then we don't have to pay property taxes for the next 60 years. And we don't have to pay sales taxes on our building materials. It's an excellent deal for us, and the city gets to achieve their goal of providing affordable housing. What this means is that our yield on cost and our IRR go up very significantly. And it increases our NOI. It does a number of other things. And so we've made this deal with the city. We've done it on a number of other projects throughout the city of Dallas, and it's very accretive to returns. A future buyer inherits this structure from us. So we're able to combine it. It's separate, but we combine it with the Opportunity Zone benefits to be kind of double tax advantaged. So it's a great thing that we've utilized. A little bit about the timeline, and this is in the deck if you ask for it to be emailed to you later, so you can really dig in further. But we plan to break ground kind of this summer. On that schedule, 18 months later, we would deliver our first units, and then a few months after that, be totally complete and then stabilized in mid-2027. And just jumping back, we would, so we'll be raising the money over the next 3, 4, 5 months, and then break ground immediately. So as far as OZ projects go, your dollars coming in would be the last dollars raised, and you would be very close to the cash flow. So you're coming in once the project has been de-risked. Our underwritten average rents are, we feel, very conservative. If you look, there are several projects that have been delivered, and then there are several projects that are still under construction. Our rents are far below what the projects under construction are trying to achieve, and are in line with the projects that are already online. And so we feel like we're positioning ourselves for a very quick lease up and room for growth. We're projecting just under a $6 million stabilized NOI and an IRR just under 15% over a 10-year hold period. We're raising $24 million. We're in a very enviable position. We just got a term sheet from an investor that has joined us in several projects in the past, an institutional investor, and they gave us a term sheet for the entire amount, which is wonderful. So you might be asking, well, why am I pitching here today? Well, what they've done with us on past deals and on this one is given us the opportunity to push them down from $24 million to $18 million. So we can, what that allows us to do is expand our investor base, because we're in the business of raising money and need to build relationships to do it. So we can expand our investor base to new investors, and we can keep our existing investors happy by offering them the opportunity to co-invest alongside the institutional investor. And so this opportunity is open to you. We have $6 million of this project to give to new investors and to our existing investors. So when you factor in the project economics, the kind of dual tax advantages from the PFC structure and the Opportunity Zone, it's a pretty unique after-tax return profile, and we're very excited about it. So to sum it up, Dallas is a great market, great multifamily absorption, demographic trends, job creation, and we're excited about the power and light, which magnifies those tailwinds of all the things that we're up to. We've been at this project for 18 months to make sure that it's been de-risked, figured out the environmental, the entitlements, been working with architect and civil engineer, and we're very close to a building permit. And within 90 days, we'll be shovel ready with a construction loan. And so your investment would come in at the very tail end once we're ready to start building and working towards a refinance. So we would love to discuss how you can be a part of this Power and Light project, and happy to have Jimmy pop back on and kind of answer any questions, or Jimmy, maybe you have a couple questions to kick it off. But again, we're excited about this and excited to open it up to kind of the group that's on the call today.
Barrett, terrific. Thanks for that. I think this is the first time in OZ Pitch Day history that we had mention of Beanie Babies. So that was exciting. And great analogy too. We had a few questions from the audience. We've got about 3 more minutes until we have to move on to the next presentations. Let's dive in. One person asked what the minimum investment is. I don't know if you stated that or not.
I did not, but it's $250,000.
Okay, so 250 is the minimum. And then let's see a comment from Kalila, who just says, that's a sweet deal regarding the partnership with local government. Really unique. what you're doing there with the different local tax abatements there, Barrett. Question from, let's see, we got a whole bunch here. We're not going to get to all of them, unfortunately, but make sure you reach out to Barrett. His email
I'll get
address
in
and
the
phone
chat
number
too.
are on the screen. Joshua asked, are you using historic tax credits in the capital stack?
We're not. It's too the historic building it will be about $1 million renovation, and it's just too expensive and cumbersome to use historic on this.
Okay. And then let's see. Thomas asks, is capital called 100% entirely upfront?
Yes.
Let's see. Brad asks, are permits final and unappealable?
Once we have them, they will be, and that should be in 60 to 90 days.
Good. And then let's see, we had a few questions here in the chat as well. Let's see. Kirk asks, will there be a cash event in 2027 for investors to help pay cap gains tax due?
Should have covered that. It's unlikely that we will be able to refinance this project before 2027. So before you invest, figure out how you're going to pay your tax bill. That being said, once the project is built and stabilized, we do plan to refinance. And our goal is to send back investors almost half of their initial capital contribution once that refinance occurs, likely in 2028.
Okay, Matt wants to know, can you discuss the impact to your projections if interest rates and inflation continues to both rise over the next 3 to 5 years?
Sure, didn't talk about this. I'm happy to do it separately on a call with someone. We typically use a financial instrument called swaptions. So it's an option contract that hedges the possibility of interest rates going up so that we can still do a cash out refinance at stabilization.
Good. And then let's see, we've got time for maybe one more question here. Let's see, there was a question about CDFI here from Philip asks, what about the impact of CDFI funding at the capital stack level?
Sure. Interestingly, the investor that has kind of committed to doing the entire thing is a conglomerate of banks that has invested with us multiple times. They're an offshoot of a CDFI, but it's not actually a CDFI making the investment.
All right. Well, we think we've just about run out of time, but please do reach out to Barrett that's Barrett at savoyequity.com. His phone number's on the screen there as well. Barrett, thanks so much for your support of OZ Pitch Day and for joining us this morning. Really appreciate your time. Thank you.
Thanks, Jimmy. Always a pleasure.